Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, chip stocks are headed toward their best quarter ever, but recent swings are making investors concerned about the durability of the AI boom. Plus, Taiwan raids the offices of Supermicro as part of an investigation into the alleged smuggling of Nvidia chips into China. And a $1 billion misunderstanding leaves Korean investors empty-handed in the blockbuster SpaceX IPO. Everything is about semiconductors at the moment. In the here and now, the Nasdaq 100 is higher, and there is outperformance in chip stocks on the stocks today's session, but also over the last 3 months. We have to zoom out. The stocks is now on track for its best quarter on record ever. With the final trading day of June and the second quarter upon us, the stocks is up 86% over the last 3 months. It's also up almost 100% year to date. I would make the point that we're only halfway through the year. We'll see where we net out when the year ends. Even after recent swings, this has become a historic rally driven by one question: how long can the AI infrastructure spending boom last? Let's get out to Bloomberg Tech equity reporter Ryan Vlastelica. You've been writing about this on the Bloomberg, and the main point being that we're on track for the biggest quarter ever on the stocks, but there have been swings. There has been volatility. What do we need to know?
Hey. Yeah, so this has been a very volatile quarter for stocks, although the general move has been not just up, but dramatically up. But just to give you a sense of the volatility, just yesterday, the stocks at one point fell 3%, then a reverse course, and it ended up 3%. So a 6 percentage point swing within a day. And this isn't coming on any kind of fundamental change in the outlook. People are really having a lot of debates right now about how long is this AI CapEx going to stay at the level that it's been for the past few years. And it's not just at this level, but it's been accelerating. How much longer can we continue to expect that kind of spending acceleration going forward? And if it starts to slow down, does that mean that we're actually at peak earnings right now? And if that's the case, what is the outlook for the stocks, especially following the move that we've had?
Phase one of the AI wave of this decade, at least, was Nvidia, right? Mm-hmm. And if you expanded that, GPUs and compute. Right now, what's driving this is memory and storage. Could you just explain a little bit the biggest contributors to the rally that we've seen in chip stocks overall?
Yeah, so I'd say the real story this year has been, in particular, Micron, but also SanDisk, Western Digital, Seagate, all of these companies that are involved in memory and storage. People are really starting to appreciate how central this is when you're building out data centers. And these companies have seen astronomical growth, including Micron, with I believe it was just last week that its report came out. And it gave an extremely robust forecast, really pointing to how they see visibility for a really extended period of time. This is a real change from the way Micron and other companies like this have historically operated, where they were far more cyclical, moving on consumer trends, including like phones, PCs, video game consoles, that kind of thing. But we've seen Apple come out and they're increasing their prices for phones and iPads and so forth. Microsoft came out and said it's going to raise the price for the Xbox because of higher memory. This has really been the story right now. This has really been the bottleneck in the AI trade. There simply are not enough memory chips being made to meet all this demand, which means that demand is likely going to stay elevated for really the foreseeable future, probably into 2027, maybe into 2028. I've had some people say maybe as early as 2030 is when this is really going to start to change.
Ryan, the biggest question in technology and in markets is always what happens next. Is there any sense from strategists and analysts of whether the stocks continues on this amazing trajectory for the balance of 2026?
Mm-hmm. Well, I will say that most people are very confident about the fundamental story. So they do expect the CapEx to continue. They expect the demand to remain extremely high. The question, of course, is really how much will that continue to translate to the stocks the way they have been? I think there's a little bit more skepticism about that. Some of these stocks, including Intel, including ARM, they are very expensive on traditional valuation metrics. A company like Micron looks pretty cheap, but historically that's been a bad time to buy it because that signals it's more near peak earnings. But again, you go back to the question of, is this actually peak earnings, or is this cycle very different than historical ones, and we're not anywhere near that kind of peak yet? So as far as what's going to happen, it's obviously nobody knows. It seems hard to imagine that we'll see another, 90% move over the next 3 months. But of course, all that remains to be seen. But certainly this is where the momentum is in the market right now.
Bloomberg's Ryan Vlastelica, thank you very much indeed. AI doesn't run on chips alone. As hyperscalers continue ramping up capital spending, investors are increasingly looking beyond the likes of Nvidia to the companies supplying, yes, the memory, but also networking, cooling, and power needed to support the AI build-out. Joining us now is Rob Thummel, Senior Portfolio Manager at Tortoise Capital. Just to recap, the Philadelphia Semiconductor Index is likely to have its best quarter ever, 86% gain over 3 months. Rob, what does that signal to you?
Well, I think that the AI story is still here. It's intact, Ed, and it's going to continue growing. And we continue to see CapEx spending growing. And we've got an AI infrastructure active ETF that we've designed to capture exactly what you said. The infrastructure, that's where there's the opportunity. And that includes things like Ryan and you were talking about, like memory. But the base level of infrastructure is electricity. And that's where we're going to see tremendous demand for electricity going forward. The U.S. has got a competitive advantage in terms of being able to provide low-cost electricity. And so we see lots of opportunities in memory and storage, but also in a really basic commodity, which is electricity.
I'm wanting to understand, at least from your perspective, Rob, how direct the correlation is between growing capital expenditure and the sort of outlook for, let's say, memory, just to keep it more focused. If capital expenditures from the hyperscalers continue to go up, then the recipients of that CapEx, memory names in particular, you would expect them to have the sort of similar continued trajectory.
Yeah, I think that's a simple way to look at it. I think it's an accurate way to look at it. I think if capital spending continues to grow at 20, 30, 40% annualized growth rates, well, then I think you can expect, where's that money going? Well, it's going into the infrastructure. So I think you can expect infrastructure, memory storage to grow, demand to grow 20, 30%, liquid cooling, network switches, all of that infrastructure that's really essential for AI to continue to operate. Well, the growth rate will mirror really what capital spending does.
Rob, one of the many reasons we've enjoyed having you on Bloomberg Tech is you're looking at this much more holistically, right? What goes into a data center? And right at the top of the conversation, we said it's more than memory, networking, power, cooling. Right now, as you plan for the balance of 26, where are you positioning yourself based on your belief of the main beneficiaries of this data center build out?
Well, inside the data center, it's more. We're probably more positioned on the memory side because of what you were talking about with Ryan. I mean, if you look at the the earnings Micron posted, it's very clear that the market is undersupplied for memory, right? I mean, Micron posted a gross margin of 85%. I think that's 10 points higher than what Nvidia is. I mean that's just phenomenal, right? So and the memory market, as Ryan highlighted, just continues to grow. So we continue to see substantial growth in the earnings and the cash flow of companies like Micron and the other memory names. Now, don't forget though the base level though of energy and electricity. That's probably the base level of the 5-layer cake that Jensen Huang likes to talk about. We have a lot of exposure to that as well. Energy is our expertise, I guess, in the past, and we still see electricity being a real critical driver of this AI trade going forward as well.
Just very quickly, Rob, before we let you go, SK Hynix is coming to the US capital markets with a US listing for ADRs. How would you respond to that? Bearing in mind that the SK has, 57% market share, something like that, of high bandwidth memory at present?
Well, as investors in AI infrastructure, we welcome new entrants or new companies that we can buy, right? And SK Hynix will be at the top of the list to take a look at. We've been looking at that company, obviously, and have the ability to buy it internationally, but to buy it as an ADR may make it more attractive for us. We'll take a very close look at it, though, because it is part of that AI infrastructure that you were mentioning earlier, and it's really critical, and it's something that we're trying to capture for investors.
Okay, Rob Thummel of Tortoise Capital, somebody that is, let's say, across the data center from top to tail. Thank you very much indeed. Now, coming up, Supermicro's Taiwan office is raided as authorities investigate alleged illegal exports to China. Those are the US listed shares of Supermicro, and they are down almost 5% over a 2-day basis. We'll track it. This is Bloomberg Tech. Bloomberg's David Westin joins us now for an important clarification on an earlier story. David.
Yes, thank you, Ed. Just a short time ago, we reported off of an NPR report that Justice Samuel Alito had resigned from the Supreme Court of the United States. That was off of NPR. NPR since then has said they retract that statement. I don't know what happened. The Supreme Court has said they have made no announcement on the subject. So that report was in error. The Samuel Alito, Supreme Court Justice, has resigned from the Supreme Court of the United States, and we will keep you posted.
Bloomberg's David Westin, thank you very much indeed. Turning back to tech, the battle over AI chips is moving beyond Washington and Beijing. Taiwanese authorities are investigating the alleged smuggling of Supermicro servers containing Nvidia chips to China, underscoring the growing focus on enforcing U.S. export controls. Bloomberg's Minmin reports.
Sources have told us that Taiwanese authorities have raided the residences of 6 individuals as well as the sites of 3 affiliated companies, including Supermicro's office in Taiwan, as well as one of its distributors, Albitron Technology, and a Taiwanese data center operator, Chief Telecom. Now, this is part of an ongoing probe looking into the alleged smuggling of Supermicro servers containing Nvidia's chips to China. Now, that's in violation of U.S. export control rules, but it's not in violation of local laws in Taiwan. But the U.S. has been pressuring Taiwan to match the U.S. rules, and we know that Taiwanese authorities are considering criminalizing the act of exporting these high-end chips to China. For now, though, the only legal recourse is to find existing rules, such as falsifying documentation, for example, to charge any alleged chip smuggling case. Investigation is ongoing, and Supermicro has said that they will work closely with law enforcement. Minmin Lo, Bloomberg News, Hong Kong.
Bloomberg's Minmin reporting. Washington's lobbying industry is feeling the impact of the US-China tech rivalry. Some of the capital's biggest lobbying firms are cutting ties with Chinese tech giants, including Alibaba and Tencent, as new US restrictions force them to choose between representing Chinese companies or American defense contractors. Bloomberg's Ted Mann joins us for more. Ted, it was really interesting to get into this. I learned a lot about kind of what happens in the hallways of the nation's capital. But let's start with the sort of crux of what we're reporting. There is a whole industry, a lobbying industry, that basically now feels it can't represent some of the biggest tech companies in China.
That's right. The lobbying companies have reached a time for choosing here. They have to decide whether to continue to represent those companies, and in so doing, they would have to forego working with companies that work with the Pentagon. And that's just too big a slice of the book of business for those major firms. And so they're having to drop the Chinese companies instead. This is something that has been building for more than a year, and then they're finally at the deadline now where they had to drop those companies.
Historically, how effective are the tech lobbyists on getting the government of the day to make decisions or take action that's in their favor? I mean, this administration in particular has had sort of a range of what they would call hawkishness on China. The export or not to export chips has kind of been at the heart of that. But I think it would be really valuable to the Bloomberg audience to kind of understand how this has typically worked in practice.
Yeah, I mean, I think that the lobbying has been very aggressive over the years, and there is a range of views here. It's the current administration, but there's a range of sort of hawkishness in Congress too, where even during the Biden administration, you had some in Congress and in that administration and this one who wanted to take a harder line and basically, as someone was quoted saying in our story, basically stop this practice where you'd have a lobbyist coming in on behalf of a Chinese company, talking to a senator or talking to an executive branch official, and then turning around and advocating on behalf of an American company or a vendor to the Pentagon. And so for a range of people in the administration and also in Congress, that just seemed like just too brazen to them. And so this is where there's finally some teeth being applied to the law that already created this list at the Pentagon. It was a blacklist that didn't really have a lot of ramifications before now, and now it really does. It's going to cost real money to these firms, but they're going to have to choose. And as we're seeing, the biggest firms are deciding to drop those Chinese clients because just the math doesn't add up.
Bloomberg's Ted Mann, thank you very much indeed. Another story, Apple is reportedly seeking the Trump administration's approval to buy memory chips from blacklisted Chinese chip maker CXMT. The Financial Times says the company has been lobbying US officials as it looks to offset rising memory costs, a move that's already drawing criticism from lawmakers. Senator Tom Cotton of Arkansas warning on X, quote, using blacklisted Chinese chips would be a grave mistake for Apple. Doing so would risk long-term shareholder value, the privacy of their customers, and the security of this country. Coming up, how a costly mix-up shut more than $1 billion in Korean demand out of the SpaceX IPO. The details next. This is Bloomberg Tech.
And Houston has checked your soup parameters. We are good to go. So with that, Chris, you can open the hatch thermal cover.
You're looking at pictures of NASA astronauts Chris Williams and Jessica Meir opening an airlock on the International Space Station. The pair are replacing a wrist joint on the Canadarm2, a 17-meter-long robotic arm that is essential to the ISS for tasks like grabbing cargo-carrying spacecraft before they dock. The work's expected to keep the astronauts in the vacuum of space for more than 6 hours. Definitely not your average maintenance call. Now, turning to other things that are out of this world, let's take a look at today's big number, 800%. That's how much SpaceX's revenue could climb by 2030, based on a new model from Bloomberg Intelligence. The main driver of that, data center agreements with its xAI unit. Still, even as sales rise almost 9 times, those same BI researchers say SpaceX's valuation could be brought down closer to Earth. Let's talk to one of them. George Ferguson leads aerospace defense coverage for Bloomberg Intelligence. You've been keeping the deck and the research updated. So that's really interesting. You see top-line growth, and the reason why is clear. Valuation being kept in Earth's gravitational pull. What's the thesis?
Yeah, I mean, I think the thesis here really is there needs to be a lot of growth in order for SpaceX to sort of merge into valuations that are similar to the other hyperscaler peers like Microsoft, Amazon, Google, Meta, those companies. So, at the IPO price, we measured everything at the IPO price. SpaceX was very richly valued, and if you're involved in it, it's all about this turning around the AI story, right? They've built these big Colossus 1 and Colossus 2, computer. Sorry, it's the names escape me here. The data center. Sorry, been a long day already. And they're going to sell out some of that capacity, and they need to build some of the advertising. They've bought in some other businesses. And they're going to try to swing that business from $5 billion-ish losses into something that's a little bit, $4 billion profitable by 2030, and that swing is really what brings SpaceX into profitability. But the revenue at that group's going to grow and be largely responsible for getting this company to $160 billion of revenue potentially, we think, in 2030. And so that's core to, I think, the thesis around SpaceX right now.
Bloomberg Intelligence analyst George Ferguson with the BI thesis on SpaceX. Thank you very much. To stick with SpaceX, and if you've ever felt left out, spare a thought for Mirai Asset Securities. The South Korean firm was the only one of 23 underwriters to receive no stock in SpaceX's mega IPO, no allocation at all. And Bloomberg reporting it was all one big, and for the Korean asset manager, embarrassing mix-up. Bloomberg's Bailey Lipschultz is with us. Try and explain it. There's basically a process that happens in the weeks before an IPO, and there has been a miscommunication in that process.
Yeah, we go back to May, Ed. all these banks were compiling orders, or at least indications of interest. So when you're talking about tapping retail, promoting this across your retail channel, saying basically, let us know if you're interested in buying SpaceX and how much you would want to buy. Mirai did that. And they said, well, we have more than $1 billion of demand from these indication of interests. They submit that to Goldman Sachs, Morgan Stanley, the big banks running the initial public offering. And according to Bloomberg reporting, they thought that's all they had to do, except when you get closer to the launch and closer to the pricing dates in June, you need to actually show up with an order book. So according to our reporting, the bank never submitted actual orders on behalf of its clients. So more than $1 billion that was indicating interest, according to Mirai, never actually was passed along formally to Goldman Sachs and Morgan Stanley. Therefore, they get zero. It certainly was an interesting update and something a lot of people were questioning when we saw the initial distributions.
Bailey, real quick, that there are serious repercussions for Mirai. What do we know about the fallout from this?
Yeah, the regulators in South Korea are looking through what this ultimately could mean, not only for the bank, but kind of for the entire distribution. It's something that I think we will see a formal kind of ruling, a formal investigation conducted. It remains to be seen when that will come out. But that's top of mind, again, for the entire organization and really for everyone who's a retail trader in South Korea.
Bloomberg's Bailey Lipschultz with what is the most read story across Bloomberg today, and no surprise. Linked to SpaceX, we're looking at shares of AT&T, T-Mobile, and Verizon. In all three cases, down significantly and for a second day. Bloomberg had reported June 26th that SpaceX and Charter Communications had held high-level talks about partnering on a consumer mobile phone offering. And while not drawing too close a direct or causal link, like everything I'm reading on the Bloomberg terminal is that the downward pressure on these carriers is the idea that SpaceX comes in if those reports from Bloomberg about SpaceX working with Charter are accurate and disrupts that space. SpaceX, particularly in the context of Starlink, already has relationships with a couple of those. So we'll continue to track that, but it's interesting to see the level declines. It's halftime in the show. Coming up, Gavin Uberti of Etched joins us. His startup coming out of stealth, taking on chip giants, low latency approach to AI inference, serious money being raised out of the gate, busy for 2 years, and till this point, haven't said very much about what they're up to. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Semiconductors. An outperformance of semiconductors is the story, particularly in public markets. Right now, the Nasdaq 100 is up more than a percentage point. The Philadelphia Semiconductor Index is up 3%, but we've seen some big swings in recent sessions, even with the overall rally of this week. The bigger picture point is we're in the last trading day of June and headed for the second quarter, and the Philadelphia Semiconductor Index, or SOX, is on track for its best quarter ever. It gained 86% in the last 3 months. It is up almost 100% year to date, although we still have a half of the calendar year to go. Who knows what happens next? In a little while, we're going to have a conversation about how private markets are viewing innovation in silicon and also great inference demand and what that's doing for chips. We have a lot of other tech headlines to get through. Let's get out to New York, where Bloomberg's Yahara Andan is standing by. Yahara, hi.
Hi, Ed. It's time now for Talking Tech. First up, Tencent is going on the offensive after a $300 billion wipeout. The Chinese tech giant is ramping up share buybacks to support a stock that's lost a third of its value since October. The move comes as investors demand proof that Tencent's massive AI pivot can generate real-world revenue. Plus, the global AI boom is fueling a massive fundraising wave in Hong Kong, with companies looking to raise more than $6 billion through new listings. Leading the charge is Apple supplier Luxshare, the world's largest maker of AirPods. The company is aiming to raise up to $3.1 billion in what would be Hong Kong's biggest IPO of the year. And while Hong Kong's IPO market is booming, it's been a much tougher year for Chinese tech. The sector is on track for its worst underperformance against global markets since 2001, with the MSCI China Index down 15% this year. Analysts say weakened consumer spending and a lack of homegrown AI hardware leaders have left China trailing the global AI rally. Ed?
All right, let's get to private markets. Startup Etched is emerging from stealth with an eye toward taking on chip heavyweights like Nvidia as the industry shifts from training AI models to running them, inference. The company's raised $800 million in funding out of the gate, including backing from the likes of Jane Street and TSMC-linked firm Venture Tech Alliance. Etched CEO Gavin Uberti joins us now. You have introduced a rack scale system, very interesting split memory design, very focused on inference. We'll get into all the money you raised and what you've been doing quietly for 2 years. But could we start on the system? What is Etched? What is it pitching?
Well, Etched is building rack-scale inference systems. And we're really excited today to go and unveil both our funding and two of our core technologies that make the tech work, what we call low-voltage inference and cluster-scale memory. When you think about inference, you think about prefill and decode.
Yes.
That is reading in all the input data and then producing out those decode tokens.
We're just showing an image of the system on the screen, the rack-scale inference system. What is it we're looking at? Break it down for us.
So right here, you see one of our racks. This thing comes pre-assembled with 32 of our chips in it for our first-gen product. And what you have is our cluster-scale memory tech linking those chips. And this technology allows for very low latency communication between chips. And that then allows one chip to read and use the HBM and SRAM memory of other chips in its system.
You have a very interesting story. You've clearly been busy for a couple of years, but you've raised a significant amount of money from a very interesting list of backers. Just reflect on that for a minute. I mean, how have you been able to convince a Jane Street of the effectiveness of the technology, and why raise capital at that level?
Well, I think if you look at our backers, they are extremely technical. To go ahead and take a bet like this on somebody like myself and my co-founders, you need to go ahead and be very first principles driven, understand the tech very, very deeply, and see why the market is going to be so big and why this technology is fundamentally better. And our backers like Jane Street and Venture Tech Alliance have big chip teams, and they get it.
We had reported, I think, that money was raised at around a $5 billion valuation. But what's astonishing is, with respect, the brief history of the company, right? How long, when did you come up with the idea? What was that first couple of years of trying to get set up like?
Well, it took a lot of work to get to this point. We're at a spot today where we have the rack scale inference systems running, and we have this tech proven out. And while it's not a low valuation, the fact that we have the tech to back it up, I think makes it make sense.
I'm really interested by the specifics of the system. On the program of late, just by way of example, the pitch of Cerebras is its insulation from what's happening in high bandwidth memory because it doesn't rely on high bandwidth memory. SRAM is what they have configured. How does that work for Etched and its system?
Well, for us, we're able to go ahead and get more out of the same volume of HBM. And one of the ways we do it is with tech we call low voltage inference. We want to be able to use the same HBM and the same SRAM to run way, way more tokens for more users. But the bottleneck here typically is power. If you look at a GPU, it thermally throttles. You cannot fit more compute onto that same chip. So what we do is we lower the voltage a lot. We run at under half the voltage of typical Nvidia GPUs. And as a result, we're able to get very large power savings. And that in turn means you can have more users on the same chip and get more mileage out of your same HBM bandwidth.
If you think about the economic benefits for the customer and the user, then you would pitch this as being superior on essentially a dollar per token basis.
Absolutely. We think about this as economies of scale. You can go have more infrastructure. It allows you to go ahead and get a much lower cost per user. And as the models get bigger, that cluster scale memory tech is going to give more and more of an advantage.
The world we're in is that, for some time we've been talking about better performing systems coming for NVIDIA architecture, right? NVIDIA still has a technical monopoly in the market. What does the pathway look like for you to scale? And is there anything you can say about sort of real world workloads that are being run on your systems, real world revenues that you're already able to point to as evidence that this will be out there in a meaningful way?
Well, we are running some benchmarks, and we are seeing best in the world performance. But what gets me really excited...
Outside of the lab environment, though?
We've had some customers test the system. But what gets me really excited on this is production. That to make a big difference, you have to build a lot of these products. And we have a world-class platform and production
And that
team.
explains the capital that you raised?
It's a key part of it. The team is such a massive part of our story. Around half of our platform team is from Nvidia. We're lucky to have some of the best, including our VP, who ran Nvidia's DGX and HGX team.
Gavin Uberti introducing Etched to us, CEO of Etched, raising a lot of money after 2 very quiet years building a low-voltage inference system. Come back. Thank you very much indeed. Now, coming up on the show, the US has long been a top destination for talented immigrants, but increasingly, restrictive immigration policies are changing the corporate landscape. We have a few stories next. This is Bloomberg Tech. Today, the Supreme Court rejected President Trump's planned restrictions on birthright citizenship, invalidating a central plank of his immigration agenda. The court saying the executive order couldn't be squared with the Constitution's 14th Amendment, which guarantees citizenship to virtually everyone born on U.S. soil. Bloomberg's Washington correspondent Tyler Kendall is standing by outside of the Supreme Court. What do we need to know?
Well, just to underscore the point that you made about how this really does reject a central pillar of President Trump's immigration agenda. I was in this very spot back in April when President Trump became the first sitting U.S. president in modern history to ever attend oral arguments in person. That is how critical the administration viewed this policy to its broader agenda. But ultimately, the decision isn't surprising, right? We got these signals from the justices during oral arguments that this was how this case was going to go. In fact, President Trump himself had indicated that he didn't think that the justices were going to go his way. But as you mentioned, it really does come down to that executive order that President Trump signed on his very first day in office, which sought to restrict automatic birthright citizenship to those with at least one parent who is a U.S. citizen or green card holder, which meant that newborn children of parents that are on temporary visas would not be able to be eligible. But the justices ultimately looked at those 5 keywords of the citizenship clause under the 14th Amendment, which says that if you are born in the United States and, quote, subject to the jurisdiction thereof, then you are a U.S. citizen. These justices sided with that longstanding legal precedent. And Ed, as you well know, it could have very broad-ranging impacts for the nearly 255,000 children of undocumented immigrants that are born in this country each year.
Bloomberg's Tyler Kendall, thank you very much. The US has long been a top destination for talented immigrants. In fact, 2/3 of its tech workers in Silicon Valley are foreign-born. While the US has spent decades relying on top-tier talent from nations like India and China, increasingly restrictive immigration policies are changing the calculus. Bloomberg Originals did a deep dive.
This story is all about the American dream. It used to be that coming to the US was this beacon of opportunity for skilled immigrants who wanted to pursue their fortune, and in turn the US received all the innovation that comes with having top talent. But now, with all the administration chaos and the visa back and forth, that calculus is changing.
The trend we're seeing is that immigrant workers who feel like they've done everything right to stay in this country are now wondering if the country wants them at all. This could affect the competitive advantage that America's held for decades. Each year, the government issues 400,000 F-1 visas for foreign students who want to come to an American university. At the same time, they offer 85,000 H-1B visas for international talent that want to come and work at American companies. The H-1B visa has been seen as the most viable way to secure a green card and eventually have a life in the US.
2/3 of tech workers in Silicon Valley are foreign-born. Even though the US is now a powerhouse of the AI-fueled economy, it's relied for years and years and years on a lot of skilled immigrants coming from countries like India and China.
Making matters more complicated for skilled immigrants, the Trump administration is flip-flopping on immigration policy.
All the 50 skilled immigrants that we spoke to, that was a sticking point for them. That was a moment where the path that they had charted would not be possible anymore.
You can read and watch the full report on Bloomberg.com. More on immigration. So after the Supreme Court officially struck down President Trump's signature restrictions on birthright citizenship this morning, with implications for the future US tech workforce, which relies heavily on immigrant talent, as was just outlined. New data by Handshake shows the share of entry-level jobs offering visa sponsorship has plummeted to just 2.3% this year. Joining us now to break down what is at stake and what is happening, Hiba Anver, partner with Erickson Immigration Group. Welcome back to Bloomberg Tech. I want to start with the Supreme Court decision, if I may. As many would point out, those in the technology industry from all around the world come to the United States in part for their careers, right, to seek a job in the technology sector, but also with the hope that, if they have a family here, it offers a future to their family. I would just ask, based on your client base, your experience working as an attorney in the field, what you make of the decision by the Supreme Court this morning.
So I think that this is going to be good news for the tech industry, the healthcare industry, financial services. These are all industries that rely very heavily on workers from countries that are heavily represented in the H-1B and the L-1 pipelines in particular. So I think that first and foremost, this is a win for stability. The last 18 months have involved a tremendous amount of change. And I think that, had the decision gone a different way, then the immediate question that would have occurred to a lot of business leaders is, if the court was willing to go that far, what other reinterpretations would have been possible? And so, with the uncertainty itself being arguably economically damaging, I think that, again, this is a win for stability and continuity.
Hiba, I want to go back to that data, the Handshake data, that the share of entry-level jobs offering visa sponsorship has plummeted to just 2.3%. You can see, based on that chart, the visual alone, that in 2023 we're above 10%. What does that data tell you about the impact of policy?
I think that we're seeing basically a acceleration of the talent drain, right? We're already seeing brain drain. Foreign job seeker interest in the United States is at a 6-year low. There are estimates that there has been a 17% drop in enrollment on the part of international students. The economic consequences of that foreign student enrollment drop is, by some measures, quantified to be over $1 billion. And so I think what this is demonstrating is, again, the fact that interest is starting to be directed elsewhere, but that you cannot divorce the overlap between the immigration policies as well as their downstream economic effects. And a lot of these trends are starting to have economic impact on, U.S. workers and the U.S. labor force as well.
If you could give any case study or just sort of illustrative example of, if you're working for a technology company or you are representing somebody that's trying to secure a job in the tech sector in this country, like, what is the real world experience of those two entities in securing a visa in this current environment?
There is a tremendous amount of scrutiny. There's a tremendous amount of vetting. The evidentiary burden is becoming increasingly more strict. And then when it comes to individuals who are from certain countries, the wait time before an individual can convert to a legal permanent resident of the United States is years and years, if not decades. And so, this is not as simple as saying that foreign workers are taking jobs from U.S. workers. Foreign workers actually have to jump through a lot of hoops to be able to achieve their immigration goals. And had this decision gone the other way, I think that there would have been a segment of that high-skilled foreign talent demographic that would have seriously, rethought the decision to choose, the United States as their permanent home.
What are the technology companies doing? Are they spending more to secure that talent? Are they lobbying hard to have policy change?
I think companies just want to be able to hire who they want to hire. And when it comes down to finding the right talent, they're interested in onboarding that individual as quickly as possible, regardless of where that individual is from. The industries in which a lot of tech companies operate are becoming increasingly competitive. It always feels like it's a race to innovate all the time. And so companies just want to be able to hire without any sort of, burden or hindrance so that they can remain competitive. And so when they hone in on a qualified candidate, they want to be able to do whatever it takes to be able to bring them on. The more barriers that are presented in a U.S. company's ability to do that, the further advantage it creates for companies outside of the United States. And so, what I've observed is that companies, while the overall demand for foreign talent has decreased slightly because companies seem to be hiring less in general, once they decide that there's a particular candidate that fits their need, they're really willing to do whatever it takes to be able to bring them on because the stakes are so high.
Hiba Anver of Erickson Immigration Group on what's happening with the technology workforce, with immigration policy, and this morning's Supreme Court decision. Thank you very much indeed. Now, coming up, media conglomerate Comcast has plans to split up NBC, Universal, and Sky from the rest of its business. The spin-off is meant to allow for more strategic flexibility. We're going to have more details next. This is Bloomberg Tech. Media giant Comcast has plans to split up NBC, Universal, and Sky, its European media unit, into standalone companies. The strategic move is intended to set the company up with more deals down the line, and it comes after Comcast lost out on the bidding war for Warner Brothers months prior. Bloomberg's Kelcee Griffis has been all over it. I kind of have two big questions, which is why? Why split up the company in that way? But also, it kind of feels like the era of the big conglomerate is kind of over.
That's right. I think we've seen Comcast sort of following this playbook that has come before them. We saw AT&T try the big media conglomerate strategy, and they ended up selling off Warner Media a couple years ago. So Comcast, it's their time now. They have decided that the market would prefer pure play media, pure play broadband companies, and that's the strategy that they're going to go forward with. I think one of the reasons that this might be strategic for them in the short term is that they don't want to see a bad broadband quarter weighing on an otherwise good quarter for, say, the box office or their theme parks. So that's potentially part of the thinking there.
I'm very interested in what happens to Brian Roberts, the chairman and co-CEO of Comcast, somebody that I've tried to interview several times. I would love to speak to him. So if you're watching, Mr. Roberts, if this plan proceeds.
Yeah, so I got to speak with the executive team yesterday, and they were telling me that Brian Roberts has no plans to retire anytime soon. He is going to take a step back from being co-CEO of Comcast. We don't know yet what he is going to do in terms of his chairmanship role. Will he stick around as chairman of both of the split companies, of just one of them? We're not sure yet, but he does say he plans to be involved on some level, much in the same way that he has been in the past.
Kelcee, shifting to another story really quickly, a lot of the carriers are under pressure. You reported on the 26th, SpaceX is talking with Charter, and that seems to account for some of that pressure.
Yes, this has been a really interesting thing to watch. About a year ago, we saw SpaceX buy a lot of spectrum from EchoStar, and at the time they were saying they really just wanted to do this to boost their direct-to-cell offerings. Since then, SpaceX has obviously gone through a massive IPO, and it has started edging closer to potentially setting up plans for a standalone mobile carrier. And I think that's what's interesting about this report. This is some of the first concrete evidence we've seen that this is potentially on the table.
Bloomberg's Kelcee Griffis. Thank you very much indeed. That does it for this edition of Bloomberg Tech. Really packed show, lots to recap on the podcast. You know where to find it, on the Bloomberg terminal, as well as online on Apple, Spotify, and iHeart. From San Francisco, this is Bloomberg Tech.